Well, it's not just here. Interest rates around the world continue to come down, and mortgage rates are no exception. Should we be braced for a big boom, though, in the housing market? Joining us now, Mark Fleming, Chief Economist at First American. And Mark, did you hear my tease going into the break?
I did.
It's not just rates? Come on. What is it that's maybe creating this boom in refi?
Well, it's what the rate you have on your home now versus the prevailing rate. And because rates, basically, there's a big difference. There's about 7 or 8 million homeowners who already have rates below 4.5% or 4%. So if you have a rate that's at 3.9, a lot of people are saying, hey, that's not low enough. How low does it have to go to really incent that ability to refinance?
How low does it have to go to really incent? I mean, answer your own sort of point, Mark. I mean, if you're not incented at 3.6 or 3.5, whatever you can get right now with good credit, what is somebody going to be incented by?
Well, 3.4 was the low point back in 2016, so it's quite possible. We have at points this month flirted with that very, very low level. But every time we get down to that low level, everybody who's in the money goes and refinances. So each time you sort of flirt with it, it gets harder and harder because there are fewer and fewer who are still going to benefit. Can we go below 3.4? Maybe then we'd see it. But it's one of those things. The other thing is, what luckily is, everyone has tons of housing equity. So it's not just about rates, to your tease earlier. It's also about having the equity in your home. And it's some combination of those two that would really drive a surge in refinance.
Well, listen, we have been here before, and I'm not going to compare anything now to 10 or 12 years ago, Mark, but are you seeing a lot of people? Refiing is one thing. Refiing and taking out $200,000 of home equity to buy a boat is a different thing. Are we seeing people be more responsible now?
That's hard to say. I mean, yes, we do see cash out equity being used to drive sort of home improvement. One of the most obvious things you would do is take some of that money out instead of moving, because we talk about home sales being relatively muted on this show with you. Instead of moving, they'll take that equity and they'll use it to renovate. Not a lot necessarily on the buying boats and cars. That might be an issue with the fact that if you're worrying about potential recession in a couple of years, you're not going to do that.
Mark Fleming, First American. Wow, rates 3.4, 3.5. I mean, it's an unbelievable story.